Hello traders, my name is Gregor and welcome to a new video in which we will take a look on the euro dollar, oil and the S&P 500. On the euro dollar weekly chart, as you know, we are looking down here from this wave E peak after a free wave rise from 2012 low. On a daily chart, we were tracking a 5-wave decline in wave wave 1. This wave 1 now appears complete after this sharp reversal from yesterday's lows. We also can count minor 5 waves, subwaves within this red wave 5, so of course we are looking higher now. In fact, on this 4-hour chart, if you recall, we were tracking this ending diagonal very closely. We also noted that this recovery is corrective and that new lows should be seen. Well, new lows were seen for just for a few pips before market reversed sharply to the upside. Also notice that this decline in wave 5 was also in 3 waves, and you know that each leg in ending diagonal should be structured by 3 legs. So I think this is a very nice textbook example of an ending diagonal pattern which caused a sharp reversal higher on the euro dollar, which is also expected to occur once ending diagonal completes. Okay, and this reversal of course was confirmed after a break of this wave 4 swing high. Now this recovery appears to be very strong. It's impulsive. I'm looking for a possible scenario of 1, 2, 3, 4, 5, which means more gains to come in red wave A. This red wave A will then be part of this wave 2 pullback. Now keep in mind that this wave 2 pullback must be in 3 waves, which means just a second, which means that we should see more upside in the coming days. Okay, ideally this wave 2 will be just a simple zigzag, because zigzag is the most common Elliott wave pattern. Okay, so we will be looking for a 3-wave rise, and ideally this wave A is now still in progress but could stop around just a second, around this wave 4 of 1 lesser degree. Okay, so that's on the euro dollar 4-hour count. On this daily technical chart, I'm looking for a test of this 50-day moving average, which comes in around 131.50. So with all this said, I think that euro dollar will rally more in coming days, maybe even weeks, and we could see levels around 131.50, as I said, maybe even 132 before we may turn bearish again. But before we may look to the downside, which means for weaker euro dollar again, we of course need to see a completed 3-wave rise in wave 2. Now we are still only in wave A, so more sideways or even bullish price action will come while the market is trading above this swing low. Now let's take a look on the S&P 500. On the S&P 500, we mentioned in our past video that this ending diagonal is complete in wave 5 and that market should then turn lower, and ideally you will tend to see a retrace all the way down back to the start point of this ending diagonal. Now notice that this recent swing low occurred just 1 point actually from these levels. Okay, so we can say that this mission is accomplished, that we have seen a whole pullback that we were expecting for. Now the only question is how this decline will unfold. Well, for now I can still see only 3 waves down from these highs. So if the structure will remain in 3 waves, it means if we will see a reversal back above this wave B swing highs, then this decline will be confirmed as a corrective. In such case, again we will be looking higher. If this decline, which for now is still in 3 waves, will unfold in 5 waves, something like this, okay, then of course this will tell us that stocks are headed even lower, because we know that 5-wave patterns are always part of some larger structure. Either it's a larger 3-wave corrective movement or start of a new impulsive bearish sequence. Okay, but because I always somehow want to stay with the larger trend, which is clearly up on stocks, I will definitely keep a very close eye on this wave B swing highs, and if broken, then we will know that we are back on a bullish track here. Okay, so that's for the S&P 500, and now let's take a look also on crude oil. On oil weekly chart, we are tracking triangle in wave B here, now in final stages of this wave E, which still has room for even deeper levels, because on this daily chart we identified this first leg as a wave A. Okay, so this leg equals to this leg. Okay, and the most important thing is that a recovery from November 2012 low cannot be counted impulsively, because as you can see, this decline has traded into a territory of a wave A. Okay, so I think that this whole recovery is just complex corrective wave B, which can be counted as a double zigzag. Now this was a first zigzag with an extended structure in wave C. This was another free wave of a pullback labeled as a wave X, again with an extended wave C. Now this was wave A of a second zigzag, wave B pullback, and again extended wave C. Okay, so you cannot count impulsive structures here, which means that this whole recovery from here is probably corrective. Okay, and if we also put this into the context of this weekly count, then of course we should be aware of more weakness on crude oil. In fact, on the 4-hour chart, decline from this week highs is looking very bearish, because it can be counted in 5 waves. This was wave 1, this was wave 2 pullback, extended wave 3, and now maybe wave 4 still in progress, or maybe 5th wave is already finished here. But in either case, we think that this market will move even deeper, and any bounce, corrective bounce, will probably look for a reversal lower again from this wave 4 of smaller degree around 94 to 95th area. Also, if you remember our last video, we discussed about corrective channel and base channels, and at the start of the week we firstly thought that this pullback from the highs will prove corrective. At that time we also posted the intraday wave counts and noted that wave C, okay, if this was wave A at the time and wave B, that wave C should stop around this support line of this trading channel, because in a corrective pullbacks you will tend to see very slow and quite overlapping price action within this trading channel. Okay, that's why you call this as a corrective channel, while in impulsive price actions, very fast movements, you will tend to see a break out of this trading channel, and this is exactly what has occurred here. Impulsive breakout through the lower side of this trading channel. So actually this was not a corrective movement, but this breakout with the daily close well below this trend line suggested that this was actually a base channel and that we are trading in the middle of an impulsive weakness. Okay, so this breakout was very important in analysis in this week, and that's why I turned bearish when the market was trading here. And you can see that then we saw immediately another $3 or $4 fall on this crude oil. Okay, so again, if we put all this in one larger perspective, then these all details suggest that crude oil will extend even deeper, because here we have an impulsive sequence to the downside, and because this recovery has been looking corrective. The next very important signal for a bearish case, for a weakness all the way back to November lows, will of course be daily, even better a weekly close beneath this trend line. Okay, And the wave count, of course, the bearish view is valid as long the market is trading below these swing highs. Okay, traders, this is it for today, and I will see you on Monday. Have a good day. Bye.